The iShares Core S&P 500 ETF, which trades under the ticker symbol NARVD, is an exchange-traded fund designed to give investors exposure to the United States stock market. It is managed by BlackRock, one of the world's largest asset managers. The primary goal of IVV is to track the performance of the S&P 500 index. This index is a widely followed benchmark that includes approximately 500 of the largest publicly traded companies in the U.S. By investing in IVEV, an individual buys a small piece of all these companies, offering immediate diversification across U.S. large-cap equities. Launched May 15, 2000, the fund has a long history of tracking its index. As an ETF, IVV shares can be bought and sold throughout the trading day, much like an individual stock, giving investors flexibility. IVV's core purpose is to replicate the S&P 500's return, not to outperform it. This passive approach is a key characteristic and a major reason for the fund's popularity. One of the most important factors for any investor to consider when evaluating an ETF is its expense ratio. This figure represents the annual fee charged by the fund manager to cover operational costs, management, administration, marketing expenses. For the iShares Core S&P 500 ETF IVV, the expense ratio is currently 0.03% per year as of September 2024. This is an exceptionally low fee and one of the fund's most compelling features. A lower expense ratio means less of an investor's money is consumed by costs, so more return is retained. 0.03% means for every $10,000 invested in IVV, the annual cost is $3. This small amount can materially impact long-term growth via compounding. IV's low fee stems from passive management. Active funds conduct extensive research and trading. IVV replicates the S&P 500. Less research and trading, lower operational costs, savings pass to investors. Dividends represent a portion of a company's profits that are distributed to its shareholders. Since IVV holds the stocks of hundreds of dividend-paying companies, it collects these payments on behalf of its investors. The fund then distributes this collected income to its own shareholders. IVV pays out these dividends on a quarterly basis. March, June, September, December. This regular income stream can be an attractive feature for investors, providing a source of cash flow in addition to any potential appreciation in the fund's share price. The dividend yield of an ETF is a key metric that expresses the annual dividend income as a percentage of the fund's current share price. As of late 2024, the trailing 12-month dividend yield for IVV was approximately 1.3%. It is crucial to understand that this yield is not fixed. It fluctuates based on two factors. When an investor receives a dividend payment from IVV, they have two primary options. Take the payment as cash, which can be used for living expenses or other investments. Reinvest the dividends automatically via a dividend reinvestment plan. Reinvesting allows an investor's position to compound more rapidly over time. It is also important for investors to be aware of the tax implications of dividend payments. A common point of confusion for new investors is the concept of earnings when it comes to an exchange-traded fund. An individual company like Apple or Microsoft generates revenue from selling products and services, incurs expenses, and reports its net income or earnings each quarter. An ETF like IVV, however, does not operate in this way. It is not a business that produces goods or services. Rather, it is a portfolio that holds the stocks of many different companies. Therefore, an ETF does not have its own earnings in the traditional corporate sense of the word. Instead, the total return an investor receives from owning IVV comes from two distinct sources. The first and most significant source is capital appreciation. This refers to the increase in the market price of the ETF's shares over time. As the collective value of the 500 companies held within the fund rises, the net asset value of IVV increases, which in turn drives its share price higher. If an investor buys shares at one price and sells them later at a higher price, the difference represents a capital gain. The second component of total return is the income generated from dividends, as discussed in the previous section. When dividends are reinvested, they purchase more shares, which then have the potential to appreciate in value and generate their own future dividends. To fully appreciate the investment proposition of IVV, it is essential to look at its composition and sheer scale. The fund's size is measured by its assets under management, which represents the total market value of all the assets it holds. As of late 2024, IVV managed assets totaling approximately $540 billion. This massive AUM places it among the largest ETFs in the world, a testament to its widespread adoption by both individual and institutional investors. The holdings of IVV are designed to mirror the S&P 500 index, which is a market cap-weighted index. This means that larger companies have a greater impact on the index's performance and, consequently, make up a larger portion of IVV's portfolio. As of late 2024, the top holdings in the fund included some of the most recognizable corporate names in the world, such as Microsoft, Apple, Nvidia, Amazon, Alphabet. These top 10 holdings alone typically account for over 30% of the fund's total assets, highlighting the significant influence these mega-cap companies have on the fund's performance. Beyond individual company holdings, it is also useful to examine the fund's sector diversification. The S&P 500 provides exposure across all major sectors of the U.S. economy. As of late 2024, the most heavily weighted sector in IVV was information technology, financials, healthcare, consumer discretionary. This broad sector exposure ensures that the fund is not overly reliant on the fortunes of a single industry, although shifts in the market can lead to changes in these weightings over time. The structure of a market cap-weighted fund like IVV means that investors are automatically positioned to benefit from the success of the largest and most dynamic companies in the economy. This self-adjusting mechanism ensures that the portfolio remains tilted towards the market's current leaders without requiring any active decision-making from the fund manager or the investor, making it a truly passive investment vehicle. When evaluating any investment, it is crucial to examine both its historical performance and the risks involved. The performance of IVV is intrinsically linked to the performance of the S&P 500 index. Over the long term, the U.S. stock market has historically trended upward, delivering positive returns to patient investors. For example, the annualized total return of the S&P 500 over many multi-decade periods has been in the range of 8 to 10%. IVV has done an excellent job of tracking this performance, consistently delivering returns just shy of the index by roughly its low expense ratio. However, past performance is not a guarantee of future results. While the long-term trend has been positive, the stock market is subject to periods of significant volatility and decline. Year-to-year returns can vary dramatically. There have been years of strong double-digit growth, as well as years with substantial losses, such as during the 2008 financial crisis, or the bear market of 2022. An investor in IVV must be prepared to weather these downturns without panicking and selling, as the investment is designed for those with a long-term time horizon. The primary risk associated with owning IVV is market risk, also known as systematic risk. This is the risk that the entire stock market will decline due to economic, political, or global events. Ultimately, the decision to invest in the iShares Core S&P 500 ETF IVV depends on an individual's financial goals, risk tolerance, time horizon. The fund is particularly well suited for long-term investors seeking a simple, low-cost way to gain broad exposure to the U.S. stock market. For those building a retirement portfolio or saving for a goal that is many years or decades away, IVV can serve as an excellent core holding. Its buy-and-hold nature, minimal fees, automatic diversification aligns perfectly with a long-term, passive investment strategy. The fund is also a suitable choice for investors who prioritize cost efficiency and simplicity. Instead of trying to pick individual winning stocks or select an expensive active manager, an investor in IVV is effectively accepting the market's return. History has shown that this is a very difficult benchmark for most active funds to beat consistently over time, especially after accounting for their higher fees. However, IVV may not be the ideal choice for every type of investor. Individuals who are seeking high levels of current income may find the fund's relatively low dividend yield insufficient for their needs. Similarly, investors with a very low tolerance for risk or a short time horizon should be cautious, as the fund is fully exposed to the stock market's volatility and can experience significant short-term losses.